How much do you think the market cares about that March 1st deadline, and if it can be pushed, whether you think there's a real agreement to be had before then or not?
Well, interesting story in the Journal today that they're now working, they being Bob Mnuchin and Steve Mnuchin and Bob Lighthizer.
We're in China as we speak.
Yeah, getting ready to meet the vice premier, that they're working on the broad outlines of an acceptable deal. So that would imply that the March 1st deadline would have to get pushed back. Because when you're talking about intellectual property rights and forced technology transfer, we've only got 19 days, I believe, till that comes around. So you can't hammer out the details of a deal like that. But if you can get a framework and then the president and President Xi meet, you've got something that the market can deal with and is clearly, I think, anticipating already.
You can't have more tariffs, right?
No.
I mean, that's the bottom line?
No. You would
You're not going to 25%.
not want to see those.
Yeah.
Neither side.
Even if you didn't go up to,
500 billion.
all the way to 25%. But any sort of additional tariffs is going to be a net negative for stocks.
For global growth. You would see it's, I think the way it would likely play out, Scott, is that if indeed we've already heard rumors that maybe he will host Xi Jinping down at Mar-a-Lago. Yep. That's a nice casual sort of place to have that meeting rather than, in the White House and so forth. And it gives him a comfort level because the president is very comfortable when he's down at Mar-a-Lago.
Hotel makes a little money.
Yeah, hotel makes a little money.
We're still watching the 200-day moving average, right? We talk about these sort of technical levels, Pete, from time to time that are meaningful. It seems to be a real sharp line in the sand for stocks that we were above it at 27.44, 27.43 and change is the number. And you can see we're a little bit below that now. The significance of getting above that level is what?
A trap, to me. I think it's completely a trap. Again, I suspect that, as I said before, I think the bottom is in. I don't think we retest. I think the top is in. And I think people that are reacting through a technical breakout through the 200-day moving average to get back in again, you're going to need to tell me that earnings, Scott, they're not going to be 4 to 5%. They're going to be closer to 10 to 11%. To Pete's point, there's going to be a full resolution on the trade tensions. There's got to be more to it than just a break above some line.
But
that
you
we
don't
can see in
think
the
a
chart.
deal,
And it's got to be sustained, I would say.
The top, maybe you don't think we're going back to the retest of the bottom.
Right.
Do you agree with Joe that the top is in?
I don't know whether I don't know any of us know that. I don't think you're saying necessarily the top is in.
It is.
I would, given the conditions that we have so far this year, I can't see us going back to 29.50. I see we're higher.
So you basically think we're not going to see an improvement in earnings as we go through the year at all?
I don't have enough clarity, and I don't think you're going to have that clarity early enough in the year where you can make the determination that we're going to power through 29.50.
I think you can make a case, though, that you have global central bankers that are so loose at this point.
100%.
China is absolutely going full tilt in terms of stimulus.
Yes.
We're backing away as well. We're still, by the way, growing 2%-ish kind of thing, maybe a little bit more than that. I mean, I actually think the first quarter or second quarter could be the bottom in earnings, and that as you get into the second half of the year, global growth pushes earnings a little bit better. And I don't think anybody's talking about that. I think that's very powerful.
You're right.
I still think you'd rather be a stock picker here than a market timer, though. I mean, I think this year, the trying to play the market is probably not the best way to go. That you really find you gravitate towards quality in all asset classes, whether it's equities, whether it's fixed income, anything that you're doing, I think should be quality.
Until it changes, we've talked about this since the start of the year. This has been a trading environment, and everything we see is a trade. We are not seeing huge investments. Now, Steph might be because of the strategy in which they're doing, where they're much more into the, hey, we're going out much further in time, but in terms of what we're looking at right now, Scott, everything's been trading, and it's been phenomenal. Some of the best trading in a while. Some of these moves to the upside and the downside, you've got to have discipline, but you've got a trading environment.
You're talking largely about moves, though, in the options market that you're seeing, dictating to you that some of the trading is more short-term than not. I mean, I'm not necessarily sure people who got in, and there were some big investors who got in at the December 24th bottom were thinking, I'm only getting in for a short period of time. This was
some of them called in here even.
Yeah, so this was like way overdone. David Tepper. Yes. Necessarily thinking that this was a short-term deal. I think that was more of a bigger picture bet Like, this has gotten way overdone.
Based on the overdone side of it. But now, presently, where we are right now, and over the last couple of weeks, let's just think about that. I'm not going all the way back to December 24th. I'm just going back even the last 3 or 4 weeks, Scott, where we are looking at a market where it's created so many opportunities, but there are very short-term opportunities out there right now. That's what we're seeing primarily.
Steph, though, is putting forth.
I don't know about that. I thought December, it was hard to buy in December.
Yep.
Very hard to buy.
Really hard.
And I wasn't buying with two hands. I mean, I was slowly nibbling, but I just focused on the companies that were delivering, and they're up a lot since then. But I think that they're long-term great companies, and so you can trade for sure. Yep. That's your style. My style is to look for opportunities.